Single-family homes in the United States have lost $2.3 trillion in value in the last 6 months. I'm Tony, and this is Real Estate Investing and Landlord News. All right, so I have an interesting article for you today, and it's going over housing values. Now, this is very important for real estate investors, obviously, because you know what? We live on the equity that we have in our real estate. But you know what? The markets, they are doing very, very badly right now, specifically in certain areas. Now, the San Francisco Bay Area has lost a ton of value, while places like Florida are still seeing increases. But you know, it varies from place to place. You know, like here in Omaha, the increases have slowed down, but we haven't seen a large decline yet. Now, that's not to say it's not going to happen, but you know, we have a much more stable economy here, and we're much less reliant upon just huge amounts of appreciation in our housing. So, yeah, it's a really interesting situation, and we'll see how it affects the country overall. So before I get into the article, go ahead, hit the like, subscribe button, maybe leave a comment down below and let me know, have you experienced a decline in the value of the real estate that you own in the area where you live? Now, like I said, I have not. I own all of my properties in the Midwest here in Nebraska as well as in Missouri. But you know, I had properties over in the Arizona and Phoenix area, and you know what? I think for now, Phoenix is still holding strong. You know, there's a lot of California refugees still moving out there, so I think the values out there are still holding strong. But I haven't really been watching the markets enough to know for sure if they are starting to struggle a little bit. But anyway, let's get into this article because it's quite interesting. This article is coming from redfin.com, and it says U.S. homeowners have lost $2.3 trillion in value since the June peak. And I think that what they're saying is that the market peaked in June of 2022. So let's get into the article and see what it says. The total value of U.S. homes was $45.3 trillion at the end of 2022, down 4.9% or $2.3 trillion from a record high of $47.7 trillion in June. That's the largest June to December drop in percentage terms since 2008. While the total value of U.S. homes was up 6.5% from a year earlier in December, that's the smallest year-over-year increase during any month since August 2020. This is according to an analysis of Redfin estimates on more than 99 million U.S. residential properties. Yeah, and the article actually has a couple of interesting little facts here, you know, bullet points, and let me read them real quick. The Bay Area housing market has lost more value in percentage terms than anywhere else in the country amid sluggish demand. Florida continues to see large gains. Yeah, and obviously there's been huge layoffs in the tech sector. You know, like every tech company you can think of, you know, yeah, they have their headquarters in the Bay Area and they've done huge layoffs. So I imagine that a lot of the slowdown in the price increase is due to the fact that, hey, a lot of people lost their jobs. And of course, people are still moving to Florida. They like the good weather. They like the low cost of living. They like the lifestyle down there. Heck, I would move there if I could. But, you know, obviously I have to stay here for my job. Home values are holding up better in the suburbs than in cities, which have seen an exodus of residents due to remote work. Yeah, you know, there for a while there's a big push of, you know, like younger people who are wanting to move into the cities, and now those people are getting older. You know, they're in their mid to late 30s, etc. They're starting families and they're saying, hey, I want to move out to the suburbs, especially after the whole thing with the pandemic where people wanted to get some space. They wanted some space and they wanted some privacy. And now, you know, the suburbs are booming. And you know what? They always were booming. They always had very strong growth, but you know, they also had growth in the city, which we're not seeing as much growth in the city as we did before. Millennials who are now in their prime home buying years have experienced larger value gains than other generations. So yeah, millennials obviously are in the middle of, you know, they're going to see larger home buying gains. Now, I am the very end of Generation X, right? So obviously I'm not a millennial. I'm a little bit too old for that. I'm 43, born in 1979. So But I do have friends, and my wife, she's a millennial, etc. Right? And so, if you bought your first home within the last 5 years, you saw huge gains. Okay, and that's what they're pointing out right now. And you probably saw bigger gains than somebody who bought a home 20 years ago saw in the very first 5 years of ownership. Asian homeowners have been disproportionately affected by home value declines. And that goes back to the areas where they're seeing the declines, where the Bay Area has a very large Asian population living in it, right? Yet the Bay Area also is experiencing some of the biggest declines in the entire country. So, yeah, that's going to have a disproportionate impact on the Asian home buyers. Values in areas with high flood and or heat risk have held up better than values in areas with low risk, indicating that climate dangers aren't priced in. Yeah, people aren't worried about climate change. People aren't worried about climate dangers or, disasters or whatever, okay? People want a certain quality of life, and they're willing to deal with natural disasters from time to time. Like, I get tornadoes every single year where I live. And, I lived in Kansas, I live here in Nebraska, and every year we get multiple tornadoes coming through the area, and, it's scary and all that. But the things that I want, they have more to do with than just tornadoes. And, you could say the same about people who live in Florida and they get hit with hurricanes all the time, but they're not moving out of Florida. Or people who live in desert areas who are dealing with drought, or people who are living in earthquake prone areas or places where wildfires happen. They are choosing the place they live, understanding that, hey, there is a chance for a natural disaster in these areas, but I believe that it's still worth it to live in this area for whatever reason. The housing market has been shedding value because home buyer demand has waned, which has also caused home prices to fall from their peak. The median U.S. home sale price was $383,249 in January, down 11.5% from a peak of $433,133 in May, and up just 1.5% from January of 2022. So year over year, prices are up 1.5%, and the median home value sale price, is 383,249. Now, obviously, that's propped up by the more expensive and highly populated areas such as New York, California, etc. Right? Whereas you go to places in where I live, and the majority of houses here are selling for significantly less than that. We'll just say, maybe $100,000 or more on average, less than that cost right there. But that's where I live. Versus you might have homes in California where the average sale price is 800,000. So it all balances out to the average price across the entire country, which the median price, across the entire country being $383,000, right? Which you can't really look at a huge market like the United States and look at the median value. You have to look at each individual market, in my opinion. Home buyer demand slowed in large part because rising mortgage rates, a consequence of the Federal Reserve's effort to curb inflation, made purchasing a home more expensive. The average 30-year fixed mortgage rate was 6.36% in December. While that's down from the 20-year high of 7.08% in November, it's roughly double the level from the start of 2022. Rates fell at the beginning of February, giving buyers some hope, but have since crept back up to December levels. Yeah, so beginning of 2022, rates were low. In fact, I refinanced three of my properties right at the very beginning of 2022 because I saw that interest rates were going to raise. So I was able to get all three of those properties refinanced with rates under 4%. Okay, so now we're sitting at about what's almost 6.5% interest rates, and you know what? That would have been a huge, huge loss on my part. Fortunately, I was able to refinance. I did cash out refinances, and then I used that money from the cash out refinance to buy more real estate. The bad thing is that when I bought that additional real estate, I had to pay those higher interest rates. So I ended up still getting hit in a way, but my numbers still work on the properties. It just, it just, the market isn't what it was before. And that's why a lot of people have decided not to purchase right now, because the higher interest rates have made housing less affordable for them. So, interesting article here. Property values are going down. I believe it's temporary. I think in the long run, we're going to see property values continue to increase with the natural rate of inflation. So don't turn your back on real estate just yet. If even if you're just getting started buying real estate, buying rental properties right now, keep in mind that if interest rates decline going ahead into the future, you can always refinance. So yeah, there's a lot of opportunities out there, and hopefully, we start to see an increase in values again.